Real estate prices are up, supply is low, and the Bank of Canada's policy interest rate is holding steady. So does this mean that the bottom of the market has come and gone? Stick around to find out. My name is Jason Bondy-Sawyer, and my wife Danielle and I are realtors here in the city of Toronto. If you'd like to see more of our videos, please subscribe to our channel and hit the like button as well. If you'd like to book a meeting with us, you can do so in the link down in the description. On March 8th, the Bank of Canada had the opportunity to increase their policy interest rate yet again, but they didn't. After 8 consecutive rate hikes over the course of the last year, the BOC finally decided to pause and hold steady at 4.5%. Now this was welcome news for buyers, sellers, realtors, and most of all, anyone with a variable interest rate mortgage who's been feeling the pain of those last 8 rate hikes. Now, their next opportunity to make an adjustment is April 12th, so they could hold steady still at 4.5%. They could start to bump rates up again. Either way, it's going to be really interesting to see what their next move is. In February, we saw housing supply levels dip slightly to just 2 months of inventory. So in other words, if no new homes were to come on the market, the GTA would be sold out of residential real estate in just 2 months. This is the tightest that the market has been since April of last year, and it's a clear indicator that buyer demand is increasing relative to the supply of listings. I can tell you that we're seeing a lot more offer dates on listings now, and indeed many of those listings are receiving multiple offers and selling for above the list price. Now, does that mean they're selling for crazy, unjustifiable prices like they were last February? No, but the fact that buyers are showing up on offer night and competing is a really good sign that demand is bouncing back. Another big bullet point from the February numbers is that prices are up. The average sale price was $1,095,000, which is the highest it's been since June, and the month-over-month increase is the highest we've seen in a year. Keep in mind that in February, we do typically see an increase in prices compared to where things were in December and January. So seasonally speaking, that uptick we saw last month would be considered normal. That's fine, I'll take it. After the year we've had, I just find it encouraging that the February market did something we would all consider normal. And finally, the big question on a lot of people's minds right now, has the market already bottomed out and are we now on the road to recovery? Honestly, it's too soon to say for sure. If the month-over-month price increases continue, then yes, we will eventually get to a point where we can look back and definitively say that December and January were the bottom of the market. But remember, we don't know for sure if the Bank of Canada is done with the rate increases yet. If they do bump up rates again, we'll have to watch and see what kind of impact that has on buyer and seller activity. Regardless, if buyer demand continues to gain strength and we don't see an increase in quality listings hitting the market, then there's going to continue to be upward pressure on prices. All right, we'd love to know what you think. Have we already hit the bottom? Is the Bank of Canada going to hold steady on April 12th, or will there be another rate increase? Please leave a comment down below. That's it for now, and we'll see you in the next video.